So I'm kind of curious what you guys are trying to, I don't want to say chase, but look for, and how do you define success?
Number one, when it comes to business and entrepreneurship, is the team. Is their morale high and are they making good money?
Being a husband and a father is always going to be the most important job you have, no matter, even if you make $100 billion. That's what success means to me, really time freedom to do what I want when I want.
For me, God number one. In business, it's supposed that you never talk about that. Yes, he's in all the time in the middle of every transaction.
So I'm kind of curious what kind of issues you guys have had in the past year that you have been able to solve that problem.
Don't get distracted from the projects and the initiatives we're taking on until we know it's done, we know it's set.
I didn't understand how much the soft costs were going to be or how long it would take. I thought these things would be approved in 6 months. It took me almost 2 years to get them approved. And it took my focus off of really what I should have been focused on.
I'm a woman. I'm very short. I'm young. And this is not the typical business for a woman. So imagine.
All right, cool. Welcome everybody to today's mastermind panel. This is our Real Estate Masters Inner Circle mastermind panel. We've handpicked 3 experienced real estate investors that are going to pull back the curtain on their businesses. We're going to discuss changing markets. You know, a lot of things are changing right now, how they run their operations, how they stay competitive in this super competitive market. And, you know, I got this idea because like one-on-one interviews and podcasts are cool, but I think having 3 perspectives on different topics is super intriguing because one person can say something and then the other person can say something completely different, and you may resonate with one or the other. So it's kind of good to have multiple perspectives, and it kind of just gets you to think, right? I mean, you may have thought one way about something and all of a sudden you just think something different, and then we kind of talk about it and dive deeper into it. So this will open up a lot of great conversations. So if you're live on Zoom right now, you have the opportunity to ask questions. So if you have any questions, please put them in the chat. We'd love to hear them. And if you're watching this replay somewhere and you want to join some future calls, we'll do this bi-weekly. We do this bi-weekly with our 10X TV clients. You can email tony@prohomebuyer.com and my assistant will talk to you about getting access. So panelists, you guys ready to rock?
Yes, we're ready.
You guys there? All right, cool. So what we're going to do is I'm going to round robin you guys. We're going to ask some questions. The first thing I'm going to do is have you guys just do a quick intro, 3, maybe 4 things. So who you are, where you invest, your specialty, and then if you want to brag about yourself, some kind of fun fact that maybe everybody should know. So Angelo, you want to get us kicked off?
Sure. Angelo Argentieri. I've been real estate investing for about a decade now. Operate a company in Reno, Nevada. The team is 100% remote except the acquisition manager on the ground. Our specialty, what we invest in is single families. We do about 135 to 150 deals a year. And our team is lean and mean. That's our specialty. We have a small team. We do big profits, big numbers, and we leverage a ton of automations, great processes, AI, and all that to accomplish. So we like staying small and kind of keeping it all as a team collectively.
Cool. Good stuff, man. Michael Pinter.
So I'm Michael Pinter. I am based in New York, right outside New York City. I have been part-time since 2004 and full-time since 2013. Also have a small team. We invest in New York and in Florida and in Texas, and we're expanding to a few more markets this year.
Cool. Good stuff, man. Ornella.
Hi, I'm from Colombia. I'm a real estate developer. As I mentioned, I have operations here in Texas, in several places, Dallas, Houston, San Antonio. That is where I live, Canyon Lake, and also I have a new project in Manhattan. Basically, that's what I do right now.
Cool, good stuff. We've got some high-level investors here doing a ton of deals, so this should be some really good conversation. So let's start with market talk. So before I hit record here, we were kind of talking about I was talking about the market mainly, that, you know, my market, Wichita, Kansas, has kind of changed the last few months. So I've kind of had to shift from, you know, just doing, you know, minor renovations, not staging properties, put them on the market and still getting over asking price, multiple offers, to now we have to do a little bit more to the properties. We have to stage them. We're actually doing virtual staging as well for some of them that we just feel like maybe don't quite need staging, but at least we have something on the MLS to for people to kind of visualize how they can put their furniture. So I'd like to know kind of like what you guys are seeing in the market, what you saw last year, and what you're going to do this year to kind of maybe shift your perspective or maybe stay the same. So we'll go in the same order. Angelo, tell us what's going on in your market and what you're doing here in 2026 and update on 25.
Awesome. So yeah, in 2025, Reno, Nevada, much like most of the country, definitely started to see a decrease in activity when it came to offers and quality offers for properties that are listed. So what we started doing was in 2023, 2024, and previous to that, we were probably 75 to 80% fix and flip and 20 to 25% wholesale. And it kind of we flipped that on its head in 2025. Much more wholesaling. Our investors are buying like crazy. Any deal that we ship out, they're buying right now currently, which is good. But obviously the deals are harder to come by nowadays. But when it comes to our listed properties, we started seeing a compression from like $1 million home in Reno is pretty high up there. 500 is about the average. So we started seeing like $1 million homes, $900,000 homes sitting on the market longer. So we just started adjusting our buy box down, went to like 750, then we went to 600, and that's kind of where we're at right now. The deal has to be an absolute banger for us to buy anything over 600 and hold it, whether it's, extensive renovation or a quick flip. But even with the $500,000 or $400,000 properties now, this started probably in Q4, we're seeing a bunch of offers come through with large seller credit requests, right? So $20,000, $30,000 on a $300,000 home is a massive, 10% is a massive seller credit request. And when we're talking with the agents, it's simply because that's the only way they're going to be able to afford that home. So we're seeing the crunch of, income and inflation and all that with our buyers on the back end. So we're just being super particular with which properties that we flip, and then we're just wholesaling the rest.
So those credits are, I'm guessing, are to buy down the rate so that way their payment's lower.
Exactly. The down payment or the rate. Exactly.
Yeah.
Yep.
Yeah. Interesting. One thing, quick thing I'll throw in here. Someone who is a lender, I'm working on this right now, and I'll update you guys when it comes to fruition, if it does. But he has a turnkey program. So what he does is he finds people who have properties that could be good rental properties. In today's market, it's hard to find turnkey properties because the rates are high and the prices are high, or excuse me, rents aren't quite as high as the prices have gone up and the rates are high, right? So he's come up with something where if you buy down the rate 4 points, he can get the rate down to, is it in the low fives for investors, which makes it more feasible for these real estate investors who want turnkey properties to buy them. So that may be an exit strategy for us on our lower end properties to be able to dispo deals a lot faster. So just throwing that out there.
You're making me miss turnkeys from 2020 and 2021 and 2022, Tony. I miss those days.
Did you guys do that in Reno?
We did it in Richmond, actually. We probably sold about 60 single family houses of the portfolio as turnkey to investors. Nice. I mean, we were selling, it was like 20, 21, 22% year one cash on cash return. I'm like, dude, I should have just bought all those. I don't know why. It's unbelievable.
This is why I love doing these calls, because you just gave me the idea. Maybe I should I've got a bunch of rental properties, package those up, buy the rate down and sell them off to investors, and then 1031 it into some bigger stuff. Cool.
That would be a beautiful plan. Yeah.
I like it. Awesome. Michael, what'd you see in 25 and what are you planning on 26?
So in New York City suburb area, really, it hasn't slowed down a lot. A slight softening in the higher end, but higher end here is like $1.5 million. The median price is like 800,000 in my county. So if something was priced high, some of those didn't sell as fast, but shockingly, new construction prices have gone up even higher than they were before. So something that was selling for like 1.4 million is now selling for 1.6 million. That market's still strong. In Florida, though, I definitely saw softening 5 to 10%. The prices are down. Things are taking longer. It's a very, very different market in Florida. I think that was too hot for a long time. And in El Paso, Texas, also really softening of the market, 5 to 10% down. You have to project that anytime you did a deal. But unlike what Angelo said about the wholesaling and flipping, I found that the investors here are scared about when that softening of the market's going to happen. It was harder for me to wholesale deals, and it was easier for me to buy them and do the work myself. So I probably did more fix and flips than I would have liked to, but sometimes that was the only way to make any money on the deal.
Yeah.
I have a question for you, Michael. Do you think that is because of the price point the investors were scared? Like a 1.2, $1.5 million house, you correct 20%, you're down 300 or
No,
no?
so I rarely do deals that high, but I
Okay.
find that the investors in New York, the ones who are doing a lot of the fix and flips, were just waiting for the prices to get hit in New York like they have been in other parts. It hasn't happened yet, but
Mhm.
they were much more cautious in making lower offers to buy from wholesalers. That's what I
Well,
would
I
say.
mean, yeah,
So,
the rest of the country was correcting, and for some reason you guys didn't. That's true.
right, New York really hasn't. The median prices went up and our days on market went down. So
That's crazy to hear that you guys are still going out. I mean, I say that, but we were still that way 3 or 4 months ago. So I'm not super surprised overall, but usually bigger markets are hit faster, right? I mean, like 2007, obviously that was a bigger crash or bigger correction, but the big markets got hit really fast. And then the smaller markets like Wichita took a while.
Mhm.
So
New York didn't get hit as badly in that crash. I was in the mortgage business then, and I can tell you that obviously there was a sharp reduction in buyers because the mortgages, anybody with a pulse could get a loan at that point for 100% with bad credit. But it didn't get hit as badly as a lot of other parts of the country, like Florida or Texas, where really they, 30-40% drop in price to get anything sold. New York didn't get hit that badly, which is strange, but it's just in the 1 to 4 family areas. In the multifamily market, things I think can move in bigger ups and downs in New York, but for some reason the 1 to 4 families in New York never got slammed so badly.
interesting. I didn't know that. Cool. Ornella, what about you? What did you see last year and what are you looking forward to this year?
Well, basically the same that you did, you guys did. So right now, my strategy is not just relate to the North American market. I'm trying to, market my projects for people that is foreign, investor that is outside in Latin America. So basically, that's my strategy right now. Crossing my fingers because sometimes it's quite scary to what is happening, and I don't like to lose money.
So tell us
Yeah.
about the fund. I hear that you put a fund together. I thought that was interesting because I'm planning on putting one together, and I know I've a couple clients that are putting them together, and a couple other people. So I'm kind of curious how you put that fund together and what that strategy is all about.
So basically, it's because of it's like a love and hate that I have with the hard money lenders. So So I decided to start to raise money because I know that there's a bunch of people that have money and they don't, especially in Latin America, Hispanic people have a lot of money under their pillows and they want to do investments. So I decided to start to raise this capital for my development and don't have that rush or those high interest or the risk that I have normally in a new construction project. So basically, right now, we're gonna start to make it. I don't know. Sorry for the words. Remember that I'm from Colombia, but I will try to make it put some automatization into the campaigns. I decided to work with accredited investor, family office, and these high level people that can, see this as an opportunity, and it is a fact. And also remember that the fund have something very nice that is you can diversificate the type of investment that you do in that. So one of my part of the investment is for our own projects, but the other part is for lending to my Latin community investors. So it's pretty cool.
And are you doing it as a debt fund where it's a fixed interest rate, or do they get a piece of the upside as well?
Depends of the investor. I always like to hear what my investors want, but normally I work as a fit. But if it's a big investor that is able to put some rules, I'm open, to operate in a different, make the exception according to the type of investor that I have in front. So I normally work with a fixed rate. Yeah, that's
It's the
how I
easiest way
like
to
to
do it,
work.
right?
Yes, but I'm open.
Want to get motivated sellers that nobody knows about? Introducing 10x TV. If you want to create credibility in your market, find deals that nobody else knows about, and crush your competition, you need to check into TV commercials. It is the new buzz in the real estate investing industry since we introduced it several years ago. I've been using TV commercials myself for the last 12 years and it's absolutely crushed it. So if you want to learn how to get on TV and to do something that little to no people are doing right now, go to claimmymarket.com. Again, that's claimmymarket.com. We usually only work with 2 investors per market, so if you're interested, reach out to us and book a call to see if you can claim your market before anybody else does. Now back to the show. Well, that's one of the things I'm doing in 2026, the big moves. So what I'm doing is a debt fund. So I already pay 10% interest to my investors. And so what I'm going to do is put a debt fund together and allow them to still partake in that 10% if they want to keep their money in for, I'm still putting it together, I think a 5-year period. And if they only want to keep it in for a 3-year period, then it might be like an 8%. So it allows us to not have to do releases on mortgages and send them out details. Honestly, our investors are super easy to work with. So them approving it's not a big deal. It's just all the paperwork back and forth. And then on top of that, because we're keeping a lot of properties, it eats into cash flow. So that'll allow us to take some of that money and eat the cash or the expenses of finding the properties and managing them and all that kind of stuff. And so I'm really looking forward to that because that'll allow us to keep more properties, make our process a lot easier. And then once you get a fund together and you understand the process and you do that, then you can look at other opportunities. So kind of like you said, Ornella, I think we'll put in our documents that we can actually lend to other people. So we can pay 8% to our investors or 10% and then lend it out and make 20, maybe 25%. And then I'm also looking at like some fiber optic deals, or a fiber optic deal it's a pretty big deal. So understanding the funds, and then when opportunities come like that, then we can just put together the fund, get the investors in, and have them do the deal. And then last thing I'll say is, for those of you who are on TV, if you put the fund together that you can that allows you to market to the public, you can actually do Facebook ads, and we might even play with TV commercials to find those investors. And if we do it right, first of all, they'll have to be accredited investors. And if you do it right, we might even be able to find money cheaper than 8%, right? Because, our investors right now expect 8 to 10%. But if someone comes along and they're like, hey, I'm, getting 3% somewhere else, if I could get 5%, that'd be great. Oh, perfect. We can come up with something for you. So
That's why, yeah, I would love that's, remember that we have like, it depends which population you want to work. I can work with private investor, but not necessarily be accredited investors. But how many people can I put that together? 40. But I can be public with that type of. That's what I decide to go with accredited family office, and because at the end of the day, I need that more people be involved in this type of funds. And also remember that for Latin America, that is another move that I make for open my fund. 6% is too high for them. They never see that type of return in Latin America. So
really
yeah.
nice.
We need to talk.
Yeah, for sure.
Yeah.
We need to do a campaign out in Latin America for
Give
sure.
me 4 or
Yeah.
5% money. Let's go.
Yeah.
That's one of our biggest expenses. I mean, if we look at it, we have payroll, and I would say interest is probably our second biggest expense. I mean, I'd have to
Always
look
been
at
my
it,
second biggest expense behind payroll.
yeah,
Interest. Yep.
yeah, cool, awesome, good
By
stuff.
the way, it's funny. It's funny you mentioned that because I'm actually talking to an attorney now about starting a fund, also a debt fund. I actually got the information from Brian Daly out in San Diego.
Yep.
So he started the fund. He raised, I think, $4 or $5 million, and I was talking to him about it. I think it makes a lot of sense. So I think I'm about to start one too.
Yeah. So
Well,
I
you sure
have
you have to.
So I have a connection. I interviewed him. I haven't used him, but one of my clients used him. He only charges $5,000 to do these funds, and the reason he's able to do well, I just think attorneys overcharge for funds. They know they can. Back in the day, it was like 30 to 50,000
Yeah.
to do them, but as they became more popular, then they realized, okay, we need to probably lower our prices.
All right, please get me that attorney's information if you can.
Yeah, as well. Likewise.
Yeah, shoot me an email, guys. I'll shoot that over to you. And if anybody on this panel or on the attendee list here wants that, you can email me at tony@prohomebuyer.com and I'll shoot that over to you. So I haven't used them. I've interviewed them. I have another client that used them. So please vet them and let me know how it goes. All
Yeah.
right, cool. Let's see. Good stuff here. So I want to know how each of you define success. So there's such a broad spectrum, I think, of people that how they define success. Some people it's money, some people it's time freedom. Some people it's having enough time with their family. I mean, there's all kinds of different ways to define success. And I think that's important because a lot of people think it's just money, right? And then, people get the money and then they're like, well, what's next? Like it didn't quite do exactly what they thought it would do. So I'm kind of curious what you guys are trying to, I don't want to say chase, but look for, and how do you define success? So, Angelo.
Yeah, it's a great question. The most important thing to me, number one, is being a husband. That's number one. My wife is number one in my life. Doesn't matter who else, over the kids, over everybody, right? Wife is number one. Number two, I'm a father, right? So that is the two most important things in my life. I'm a big believer in God, obviously, and I have faith, and those two things tie into that very nicely. Third, I'm a business owner and an entrepreneur, right? And it has to stay in that order for me. It stays in that order for me and my family. But when it comes to the business and the entrepreneur side, because that's what everyone's here for, success today, for example, we had our daily huddle today. It takes about 10 minutes. We have the whole team. About 8 folks on that meeting had some big success yesterday, whether it was a couple contracts, some appointments booked, some wholesale deals done, and you could just feel the energy in that meeting. And it's the first week in January. Some teams are still getting kicked off, but like the team's rocking and rolling. And we pay our team very well, very handsomely. We want to change their futures just as much as they're helping us change our future. That to me, number one, when it comes to business and entrepreneurship, is the team. Is their morale high and are they making good money? Those are the two biggest things for me.
Yeah. And if all those things fall into place, they're going to work hard for you and the money's going to come, right?
Yep, absolutely.
Good stuff. Michael Pinter.
So, I mean, what Tom Kroll says is that wealth is quantifiable, but success is always relative, right? Everybody's got their own measure of success. I tell people about this German guy in 2009, Adolf Merkel. Like the markets crashed. He owned a bunch of companies. His value went down from like 5 billion to 1 billion, and he jumped in front of a train and killed himself. That guy was worth $1 billion, and to him, he was a failure. So I've always defined success as really time freedom, right? I worked at a company for 17 years before I went into business for myself. And my boss was good. If I needed time off, I just had to ask, but I didn't like to ask. And I'm about to be 55 years old. I have 4.5 grandchildren. I got another one coming in a few months. And 3 out of 4 of my grandchildren live in LA. I live in New York. We go to see them every month. I don't ask anybody permission. I can go play with my grandchildren without asking anyone. So to me, that's success, to have the freedom to do what you want, when you want, with who you want. That is, and for some people, that's a much smaller dollar amount than it is for other people to do that. But for me, as Angelo said, being a husband and a father is always going to be the most important job you have, no matter, even if you make $100 billion. So that's what success means to me, really time freedom to do what I want when I want.
Super good perspective. By the way, you said 4.5 grandchildren. The half was the one on the way, right?
The one on the way is due at the end of February.
I was wondering how you had a half. I was just kind of, was like, were they short or like, I don't know. I was just kind of curious. So, all right, cool. Ornella, how about you? How do you define success?
So that is a pretty tough question. For me, basically, yeah, be in contact with my spirituality. For me, God number one. In business, it's supposed that you never talk about that. Yes, He's in all the time in the middle of every transaction that I made. The second one is my family. For me, that made me feel rich, even when I even was thinking about to become rich. And the third part for me is the great impact that you can have in the world. Right now, I'm opening my academy for young people in Latin America that they wanted to start to invest. And for me, that is an honor, that they choose me as their mentor. And I know that if I can, inspire this type of community and make them grow and put, they're gonna probably break the generational curse of poverty in their families. And for me, that made me feel very successful in what I do. It's at this point is not just money. It's not just money, and of course the freedom that I can get. I don't have that type of freedom because I have too many lines in my operation. I have my construction company, I have my fund of fund, I have my acquisition company, and right now the academy. So freedom is not basically what I have, but I believe that the purpose that I have with all these, um, that make me feel like very successful at this point. Yeah.
And it's a phase too, right? I mean, you're neck deep in everything, it sounds like, but at some point you'll get it to where it's, running on its own, and it's you'll get that time freedom, and what be able to spend more time doing other things once you get those things kind of across the finish line or to a certain point, right? So
Yeah.
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 So for me, I would say time freedom is probably number one, because if you have time freedom, really everything else can fall into place. You have time for your family. You have time to work on yourself. You have time for the ideas. You have time to spend with your employees if you need them. So yeah, I mean, anytime I look at something, I say, what kind of time is this going to take, and what am I going to get in return? And I wish I would have asked myself that question 20 some years ago when I got into business, because there were so many things taking my time, and I'd be like, "Oh, network marketing, I'm going to go try that." And the return on the time just wasn't there. And so I think that's probably number one for me, is just return on time, and what kind of time do I have to actually live a life? Because the first 10 to 15 years of my business, I was in the phase that you're in, Ornella. I was just grinding and raising money and doing deals and getting things, off the ground. And then you get to a point where you're like, okay, I need to slow down. I need to get some better people in place, and just kind of enjoy the ride. So I'd say for me,
Yeah.
success is time freedom. All right, well,
Yeah.
let's jump into some marketing. So let's get back into business tactics. So, marketing channels. I think businesses are all different, right? Some people thrive on one marketing channel, and there might be another company that the marketing channel just doesn't work for them. So I'm kind of curious what worked for you guys in 2025, and if there's anything new that you're going to implement in 2026. So, Angelo.
Beautiful. Yep. Our three biggest marketing channels in 2025 were TV was number one, direct mail was number two, and SEO was number three. We have been doing cold calling and texting. I've been doing that for like 10 years. We actually stopped this week. So literally Monday, no more cold call, no more text. And the reason why is we did PPC in Reno years ago, but we just never had success, right? Blame whoever you want, whatever it is. So we decided to bring that in-house. So that actually just launched this past Monday as well. We're doing PPC in-house. So that is replacing time and energy from cold call and text messaging. So we're hoping to see some good PPC returns this year as well.
Cool. Do you do any kind of pay per lead?
No, we tried paper. I've done paper lead here and there. We tested out like 6 or 7 different providers in 2024. And then we just said, we don't really need it. So we stopped.
Yeah, paper leads become really. I mean, all marketing channels have become tougher, but I think paper lead is probably the number one, just because there's more competition. I think they're paying different places for the PPL leads now that they didn't before, because they need to keep up, and then the
Yeah.
costs have gone up, and Yeah, it's just been really tough. We stopped that, I think, a year or two ago as well. So I'm just kind of
Yeah,
curious.
it's really, you got to really truly know the person that's operating that company. I believe, like, I would have to really, really trust somebody that owns a paper lead providing service that I would invest money into for sure. I think that's the biggest thing for me.
Yeah, 100%.
Mhm.
Cool. Michael, what are you doing in 2000? What worked in 2025 and what are you planning in 2026?
Like I said, my marketing was not great in 2025. I was doing a lot of pay per lead, cold calling, and mail. It was not a great year for return on ad spend for me. I did pretty well with joint venture deals because I do coaching, so a lot of my students brought me deals. And I have a Real Estate Investors Association that meets monthly. I got deals from that. But my marketing didn't really produce well. It was almost certainly 100,000% my fault. I wasn't consistent. I jumped around from thing to thing. So this year, I'm really committed to being much more consistent. I think I am. I think I'm definitely doing a PPC. I'm expanding to 6 other markets, and I'm still going to do mail, and I'm looking at a few other channels also.
Yeah, you just mentioned something that's very key. I want everybody to understand and kind of hone in on is consistency. I think a lot of people will do something for a month, 2 months, 3 months, and then they give up, right? Yeah, obviously, if it's producing nothing and you know that it's like a complete flop, I totally understand that. But sometimes people are like, oh, 3 months in, I'm only getting a 2 times return or 3 times return. But you know what? That fourth or fifth month, if you don't do that fourth or fifth month, you may have gotten $100,000 deal that totally paid for your ad spend for, a couple of years or something like that, right? Or at least a year. So I think the two things that make marketing work, because I think every marketing channel works. It's, are you doing it the correct way? So do you have the right provider doing it for you? Are you working the leads properly? I'm actually honestly having that issue right now where the leads coming in, I don't think my team's working them as good as they could. And I'm really diving into that. And we changed CRMs for that as well. And then three, consistency is because, throughout the years, TV has been our number one lead channel. Um, and I think our best year was like a 12 times return. But then we've also had where it's 3 to 4 times return. And if we would have just been like, oh, it's only 3 times return, then and stopped it, then we may not have seen that 11 to 12 times return, the next year, or the year after. And I think if you work all of those and you average it out, it should work out, right? So, what about you, Ornella? What are your top lead channels and what are you doing to find deals?
Basically, my lead channels is basically the communities. They are doing cold callings, direct email marketing. I don't do marketing. This is pretty new for me. This year is like an obligation to be doing a lot of marketing because I never needed. Just basically with my type of the line of business that I have, I just choose a piece of land and I wait, made my own development and that's not that hard. Find land is not that hard. And that's one of the things that I like it. But for the other line of business that right now I'm creating, like the phone and also the academy for sure. Right now I create. Right now I'm working with 3 agencies, different one, to create this. These campaigns, these ads. It's pretty new for me. And crossing my fingers and see what is gonna be the result for that.
So we can help you a little bit. What marketing campaigns are you thinking about, and see if we can maybe help you with those a little bit and talk you through those.
So for the phone, of course, is join make part of my phone and start to create new construction, or we can show you our portfolio and see where is the line that you want to invest. That's one. Another thing that I want to implement with the marketing is for the entrepreneurs that we have in Latin America, they can get a visa for this type of investment. So it's a plan of business that we can develop through that. And it's a great hook you know, to bring those capitals to states. For the academy for sure is the knowledge and the power, because people, when people hear new construction developer, they think like, oh, bunch of money, that is too technical, that is too, my background is that I never ever have been built something in my life, and I never required like that bunch of money. I just only needed my knowledge. Basically, that's what I put on the game. And of course that I always take action, and I'm very consistent with whatever that I do. I take it to the end. And right now I have very big projects, and the only thing that I put is my knowledge and my operation, you know. And they know that it's possible. It's not that hard. I have right now lenders that they are open to work with people that don't have any type of experience in new construction and do the, um, the new build. So basically, I want to focus that basically whoever that wants to do new construction or business in development, they can do it, with the technical support that I have, of course, with my team.
Yeah. All right, cool. Good stuff. So for us in 2026, TV's always been our number one lead channel. Radio and direct mail are closely behind that. Facebook, we started that up again last year and it actually did okay. I think we're at like a 4 times return on a small ad spend. So we are actually going to crank that up a little bit. We just found a Facebook provider that has an AI tool that can help optimize the campaign. So we're actually switching over to that provider right now and going to test that out and see how that's going to work out. With TV and radio, Facebook just makes a lot of sense. So I think we'll crank that up. And then I think just an overall perspective on marketing to kind of add what I already said is that omnipresence, I think, is so important. If you guys are in one market and you're doing marketing, is just try and find as many campaigns as you possibly can that work together. So like I said, TV and radio work well together. I think Facebook kind of works with that as well because it's kind of the same visual. We also have billboards and then we do like PPC and some other things. But again, they all work together. And when you do that, the only obstacle to that is when you're looking at your ROI, it's really hard to know what exactly drove that lead 100% because they may call from the billboard, but it may be because they saw the TV commercial 10 times or heard you on the radio while they were driving as well. And so I say that because in the past, we have looked at lead channels and said, oh, we're only getting a 2 times return. Let's stop that. But we feel like as long as we're getting at least probably a 2 times return, we're going to keep it. Other than billboards probably don't even break even. But it's just that one extra thing that they see that, again, if we get a deal, Angelo just said he got a $100,000 deal from TV before we started recording here. Maybe they, heard the radio or something else, and then TV came up because they'd heard it seen it in so many places that they actually called, whereas maybe they wouldn't have called, or they would have called more people and you may not have gotten the deal because they called multiple people, right? And
Yeah.
so I'm just a big proponent of the omni marketing. And again, I think real estate investors, and I'll include myself in this, in the past, I've just looked at marketing where like you have to get a 3 times return on investment. And I just don't think that's the case anymore when you're doing omnipresence marketing, because everything kind of works together. I mean, Angela, if you can tell me if I'm hitting the mark there. I think you do a lot of different marketing. Do you feel the same way that when you have a marketing channel, like you don't always just look at what the actual return is, you maybe look at what it's also helping other stuff, right?
Yeah, it's a great point. So the two massive ones, aside from PPC, right? Because I'm talking about 2025 numbers. We didn't have PPC in 2025. If TV and direct mail are not at least a 5-to-1 return, I know there's a problem because they both have always been. Like for the last 10 years, those are two channels we have always used, and they always are over a 5-to-1. But the PPCs, the cold callings, the texting, like we do radio with you as well. I have a question for you about that. We're going to potentially do billboards. We were talking with Heather about that as well. I know that those are just, I just want eyeballs on them, right? We're even might try those 5-second splash commercials. I just want to annoy the crap out of my market in 2026 is really what it is. You use the word omnipresence. I use the word annoy the crap out of our sellers. So that, to your point, yes, if we start billboards with you, like for me, you said radio to you is number 2. I'm like sitting here scratching my head. I'm like, we might have done like 2 deals on radio, but when we go into the living rooms, all of the sellers are like, dude, that jingle from your commercial and your radio is just in my ear all the time. So yes, to your point, it's more like a secondary attribution to the marketing return would be radio, with TV being number 1, and we track things like that. But a question that I had for you, Tony, was I don't need to know the numbers specifically, but a percentage, like out of your TV budget, right? Let's say it's 30 grand, whatever it is. What percent are you applying to radio and billboard of that? Is it like 10%, 50%? Because you saying you're getting an ROI directly from radio is shocking to me.
Getting a direct ROI?
Yeah, like, hey, we heard you just on the radio, and that's my main lead source, quote unquote.
I'd be surprised. I'm surprised that anybody doesn't see a direct ROI from radio.
Yeah, and that's why I asked the question. I don't know if we're spending enough.
Yeah, and also like usually when people say they heard us called from the TV commercial, they heard us on the radio. So again, that's like if you don't attribute some of that to the radio, then of course radio is not going to get enough credit.
Yeah.
So we've had issues with that as well. Like they called from TV, like do we give radio half the credit because they heard it there too? So I mean, I'll just give you the number. It's we spend 12,000. I think it's 10, somewhere between 10 and 12,000 a month on TV, and then we spend $8,000 a month on radio.
Okay.
And then our billboards, I think it's like $2,000 a month, maybe $3,000 a month. Okay. And it's just enough to get, like you said, eyeballs. And so then when they're driving, it's like, man, another place that they saw us, and more likely for them to call us if they hear our radio commercial or see our TV commercial. That answer your question?
Yeah, you're almost 75% of your total TV and radio combined budget. So yeah, you're spending 12 on radio and about 12 on TV, 8 on radio, you said?
Yeah.
It's like 66%. Yeah, because we were only at maybe 20%, 15%, I think, with radio.
Oh, wow. Yeah, that could be part of the issue. Yeah.
That makes sense. Okay.
Yeah, there's that sweet spot, right? You spend too little, you're not getting enough, and then you spend too much, your ROI goes down. So you gotta figure out that sweet spot. Yeah. For sure. All right, cool. Let's shift over to issues. So every business has issues. So when I used to listen, when you listen to podcasts, you hear all the good that people say, and then obviously sometimes they kind of give the bad too, right? I think you can learn as much, if not more, from your mistakes and the issues in your business, or issues that other people have in their business, than sometimes the good. So I'm kind of curious what kind of issues you guys have had in the past year that you have been able to solve that problem, to maybe help some people that may be going through that same issue. Angelo.
It's a great question. And it's something that we discuss often as a leadership team. I'm really big in prioritization, right? So for example, PPC, right? We started the research and the planning of that in August of last year. It just rolled out today, this week, you know what I mean? So, but there's 10 other things that were on the list that were like, hey, should we start this in conjunction with that? Should we, whether it's SEO, whether it's a new website, whether it's new mail, whatever, anything. I'm just talking marketing stuff. But really the biggest thing for us has been, okay, this is perfect. This is working. Set it. We'll come back to that. We've spent enough time on that. It's working good. Now we can put our full time and focus on this next thing and really get it right, hammer it down. So if you look at our returns are great. We're very profitable. But if you look at our website, I'm sure you could point out 50 different things that you would change instantly if you could, right? As would I. But we know, don't get distracted from the projects and the initiatives we're taking on until we know it's done. We know it's set. And I feel that earlier in my career, the shiny object syndrome would get me all the time. And us being super mindful about that has been a massive thing. So I know your question was, what's still wrong in the business? All those things that I have to be patient enough to get to while I finish out these things. That's the biggest problem for sure.
Yeah, I have that problem too. I think that's an ever going or ongoing thing with a lot of entrepreneurs because we have so many ideas, and if we have that entrepreneurial mind, we're going to be like, we're going to fix that, and then you just have this huge list of things.
Yeah.
And just to touch on that, one of the things we did was we implemented Trello. We've used it on and off the last many years, but I think 6 months ago we realized, man, we're not using it, enough. So we implemented Trello, which is basically a project management system to make sure that we're prioritizing things right, giving people assignments, putting deadlines to it, and all that good stuff. So, good one to share there, Angelo. Cool. Michael, what about you? What's an issue that you've had in the past that you've been able to crush?
So I did not have a great 2024 and 2025. I'm actually doing a series now on all my social media of all the things that I screwed up in 2024 and 2025. I'm about a third of the way through, about 30 different things. The basic gist of it was not marketing consistently, but there was all these things that happened in my head to not market consistently. I read a book that's a great book. It's called 10x is easier than 2x from
Dan
Dan
Sullivan.
Sullivan.
Man.
And in the beginning of 2024, I said, well, 10x is better than 2x. I'm going to start doing new construction. And I bought some land in New York City and I subdivided some land near me in Valley Stream. And I said, I'm going to start building houses. And I didn't really know what the hell I was doing. And I didn't understand how much the soft costs were going to be or how long it would take. I thought these things would be approved in 6 months. It took me almost 2 years to get them approved.
Wow.
And it took my focus off of really what I should have been focused on. And there's a whole litany of things that I screwed up. But in general, what's important is, as you said, that you have to market consistently for new deals, right? I just thought, well, I'm going to make $1 million on these 3 lots, right? Why should I be cocking around with little $20,000 or $30,000 deals? Like I thought it was just a given, and my brain was incorrect. And I needed to market more consistently, and there was a whole series of issues that happened during those 2 years. But now I am back on track now. But I had a pretty bad 2 years in the big scheme of things.
Yeah, it happens, man. I've been in the business 24 years, and there's years that I'm like, man, what am I doing here? Like, why did I do this? And why did I take on that? And it's just part of the game, man. You learn from it and you move on. So cool.
Yep.
What about you, Ornella? What are some things you've struggled in the past that you've been able to overcome or nix?
Everything. My companies are a result of a struggle that I have in my past. I mean, in my first year, I never went broke. I believe that it was for ego, but basically it was the operation, and the way how I solve operation was creating my own building company. The harmony loans, the aggressive lenders, because I have a lot of shark lenders into my history. So that's why that's the reason why right now I have a fund, and the academy for the knowledge that I have to, fake mentors, people that they don't even know what they're telling you, or educating the people just because they saw a YouTube channel or a YouTube podcast or something like that, but they have no idea what is the real life in real estate investment. So that's my academy. Even I have a book that in Spanish is Hasta la mierda es buena porque sirve para bono. In English, it's gonna be something. Even the shed is good because it worked like fertilized. It's a guide of real estate investment, and it's basically everything because people like the shine or what they believe that is be you. But sometimes say like, probably you don't want to go through everything that I have to go through every single day. And also, I'm a woman. I'm very short. I'm young, and this is not the typical business for a woman. So imagine how difficult have been for me. An immigrant, no big last names. I mean, like a nobody here and create a name here have been tough. So basically, everything I resolved with God. That put me the vision to be consistent and don't pay attention to all these haters and all these people. But at the end of the day, everything that is around of me is the response of a rock or a wall that I find in my journey. So yeah.
Cool. Well, good job overcoming all those obstacles. That's a lot to overcome. So good job there. For me, I would say we're still struggling with this. We were really good at speed to lead, but something's happened the last 3 to 6 months, and our numbers are dropping a little bit. So we had a great first quarter, second quarter, even third quarter, and this fourth quarter we kind of struggled a bit. So, and I was having trouble like figuring out, are we answering the phone? Are we returning the calls quickly? And it was really my team that was, reporting the numbers, and the software that we had, the CRM, wasn't able to report those numbers accurately. And so we just switched recently to Left Main, and we're spending quite a bit more money with them, but they have more reporting, they have more customization. There's a lot of good things that this has that our previous CRM didn't have. So we're only about a month or two in from it, but it seems to be tracking things better. And it also has some ways to find deals that are in our market that we didn't know about. So it actually pulls real-time data for pre-foreclosures and things of that nature, which is super cool. And they can automatically text them and can automatically send out campaigns. So I'm super excited about it. So if anybody needs a connection to Stephanie and her team, just let me know. I think that'll be a game changer for us to be able to track that stuff a lot better.
Great.
Cool. Which leads me to the next question. What are some tools or systems that you guys use in your business that you couldn't live without, that help you automate, systemize, keep things organized for you guys? Angelo.
Yeah, I mean, you already answered it. We built our own Salesforce, but Salesforce for me is number one for sure. Number two for me is going to be our level 10 in our meeting structure. So we have various meetings throughout the week. It is consistent as all hell. We do a quarterly in person every single quarter, fly out to Reno, and we have our annual meeting. So our Salesforce, number one. Number two, our meeting structure. Number three actually would be, it's a tool called N8N. It's for all of our automations. I build everything automation wise in there. I mean, I have a development team of 3 folks all here in the States, and they're just brilliant guys. So between the 4 of us, we've built some pretty incredible stuff and continue to. And 2026 is really big for building stuff. But those are my 3 tools.
It's funny. I wish I would have talked to you sooner. We actually thought about building our own Salesforce, but time is money. I was like, let's just find somebody who already has it. We're going to pay some more money. Do you feel like it's probably as good as like Left Main or some of the others that are built on Salesforce?
I don't know. I am very, what's the word? I don't know. It's pretty incredible what we have and what we're capable. Like, we have no restriction. We do whatever we want. We don't have to worry about, back end code that's not visible. We can do whatever the hell we want. So me and the development team, we get together, we meet. Hey, we want to customize this, build this automation, automate cold call text and emails in all of our cadences, which we have all to like seller motivation. Like, yes, I mean, it's great. We love it. But I will say I've been using and building Salesforce for almost a decade now. And so have all 3 of the other guys on my team who are about the same age as me that are on the development side. So if you're starting from scratch and you have 0 experience with CRMs, Left Main is absolutely the way to go. Like, without a doubt, it's a great system. It's a great tool. Stephanie's a great person, got a great team, great organization, heard nothing but great things. If you're a psychopath like myself and want to learn how to build Salesforce from scratch, like I did 10 years ago, then have fun. But so I don't know. I'm biased because, we do it our own, but I don't think one's better or worse than the other. They have a great product.
Yeah, cool. Good stuff. What about you, Michael? Tool systems or things that you use in your business that are game changers?
So obviously CRM, I don't use Salesforce. I'm using RE Simply, which I think you were using, Tony. And
Yep.
I found a tool lately that has been very helpful. It's called Investor Base.
Yes.
And it's a dispo tool. I was using Investor Lift and I started using Investor Base, but I'm using it also now a lot, especially when I'm in different markets, as an acquisition tool also. because when you put in an address and you get the information on the property, it'll give you what investors are paying and what retail buyers are paying for that property. It's pretty accurate. I found it to be almost dead on every place I've tried it. And that's better than any other tool that I've used, any other national tool that I've used when it comes to valuations. And most of them won't give you, won't differentiate between whether it's an investor buy or whether it's a retail buy, and this system will. So I'm a big fan of investor base.
Cool. Good stuff. Ornella, what about you?
Well, right now I'm delegating, I started to delegate much, to experts, to my marketing team. They are top line in the industry. One of the person that is going to manage my marketing, it's the right hand of the marketing, make part of the staff of Elena Cardon. So I hope that they know that what they're doing. And basically is that CRM, of course, we have a lot of people in operation. We are placing a lot of automatization in our process. That is pretty new for me, but it's a go-to for this year for sure. Pretty much that's what I'm implementing right now.
Yeah, very good. I'll just give you guys a few things. So we use LeftMain for our flipping company. Go High Level, if you guys have any other sales teams, Go High Level is pretty good too, if you're outside of real estate. And then I'll go simple, Google Sheets. We use the heck out of Google Sheets. I mean, so, like some people have these fancy deal analyzers and all these things, and everything we love Google Sheets. Like we put everything in Google Sheets. You can zap stuff in there. You can manually put stuff in there. You can share it with your team. So I would guess we have, gosh, at least 10 spreadsheets for our companies, if not more, where we just share data through Google Sheets. So it doesn't always have to be complicated, right? Obviously, you don't want to have your CRM in Google Sheets unless you're only getting, a few leads a week or a month or something like that. You can track it. But don't. Sometimes I think people overthink things and forget that there's simple tools to use like Google Sheets. So, all right, cool. Well, let's wrap it up. Let's end with, if you could go back to when you started in real estate and you could talk to yourself and you could give yourself a piece of advice or maybe a few pieces of advice, what would you give that person? What would you tell that person to do that's just starting their real estate investing journey? Angelo.
It's a great question. Two things. Number one, don't ever be the first person to try a new service provider would be number one, because we've all been burned by that. Everybody, if you're in real estate investing, you've been burned by that for sure. Want to be the first one, especially someone joins a mastermind group, the service provider, you're like, hell yeah, sign me up for that. You're all fired up. Next thing you know, they have 80 other clients from that mastermind. You get zero attention. So that's number one. Number two would be buy more rental properties for sure. I mentioned when we were talking about the turnkey thing earlier, like, God, would I love to have 30 or 40 more single family rentals at 4.5% interest right now. Yeah, it'd be beautiful, but we have enough, but that would have been the cherry on top for sure.
Yeah, that's interesting you say that, more rentals. I totally agree with you. Back in, like, I looked at our data the other day, and in 2020, now COVID obviously helped us. 2021, just the properties we bought in 2021 went up $1 million just from 2021. And so had I flipped those properties, I don't know what the number would have been. It would have been like minuscule to that, because we would have paid taxes on all that kind of stuff. So 100%, I say, stack up on as many properties as you can. People that are wholesaling and flipping, those are great for income. But even if you can just hold one a quarter, and if you do the math right with 100% bonus depreciation, by the time you flip a property and pay taxes, sometimes the tax benefits you get from the cost segregation and the bonus depreciation, you actually make more money because of the tax savings that you get back, and you've got that equity in the property, right? So that's a good point there, Angela. I love that. Michael.
So obviously the same. I wish I would have held on to a million more properties, but the first 4 years I was in business, 2013 to 2017, I didn't really understand what wholesaling was or direct to seller marketing was. I was just buying at auctions and from REO or bank owned realtors. And I wish I would have started marketing earlier. And I would absolutely tell myself to never stop raising money. You're always going to need money. So you have to be constantly marketing, not just for deals, but also for capital.
Yeah, absolutely. Ornella.
So many things. So one of the things I'm agree with Michael, that is one part that never nobody teach you how to do. It's and for me it's an art how to raise capital in a proper way, constantly, not waiting for the deal or that, because at the end of the day you will regret it to for growth. So one of the things is how to raise capital. Second thing for me is create boring structures. Boring structures is what makes make grow an industry. The third thing, I would love to start to make marketing sooner, but at this point it's never late. So we're starting now. A lot of knowledge, it's never gonna be enough. Learn a lot of with, experience of people that have this real experience in this industry, and take action. That's it.
Very good. Speaking of money, you talked about raising money, Michael, keep raising money. Do any of you guys use the local banks for anything? So back in, and I'm glad she did. I had an employee back in 2006, probably, might even been, yeah, probably, yeah. Anyway, somewhere around that time frame. And she's like, "Why don't you deal with local banks?" And I'm like, "I don't need to. I've got private investors, and then I can't remember where I was refinancing my properties at that time. But any which way, I took her advice. So I went into a bank and I gave him a portfolio of like all my financials and all that kind of stuff. And I built a relationship with a bank. And all of a sudden, I had another bank that I could send deals to fund on the purchase, but then also refinance. So then that started going well, tapped them out, went to another bank. So long story short, now I have probably 6 local banks, you know, way over $10 million worth of lines that I can use at any time. And it's a game changer. And recently there was a DSCR lender that I decided to try. So I started sending deals to them. I sent them like 4 or 5 deals recently, got to the closing table. They figured out that I had funded a deal from one of my companies to my other company, and they saw that my name was on the payoff letter. And I signed all the documents, closed on it, or pretty much closed on it. And then last minute they rescinded and they took it away. And they said, "We don't like that you were the lender on your own deal." And I'm like, "Why? That's so
Why?
stupid."
Yeah.
And so now I've got to start all over again. So I'm like, I'm never using you guys again. And I'm just going back to my local lenders because I can literally, and my team on this one deal, there was 100 emails back and forth with them asking for stuff. With our local lenders, it's like 3. We send them the deal. They said, okay, they'll let us know when the appraisal's done. Let us know when the closing documents are done. It is so easy. We don't have to give them statements every time. We don't. It's so much easier. So my recommendation for you guys from that perspective is to build local lender relationships. And that wasn't going to be my thing to say from the last question. And I'll just give you guys a couple things. One would be to tell myself from the beginning is that it's going to be hard and you just have to enjoy the journey. I think all of us have been through the thick of business and getting our teeth kicked in, and just realizing that if you get up and you move on, something else is going to happen. Something good's going to happen. And if I look at everything that bad has happened in my career, the big things, there was always something good that came out of it. In fact, 2019 was a really tough year,
Mhm.
and I ended up downsizing my staff. And it was the hardest thing because I had to fire or lay off 3 family members that were working for me, kept one of them.
Dude.
And so I had to go from 15 people to 3. Talk about an ego hit, all that kind of stuff. But what it did was, because I didn't have so many employees, it gave me the time when someone gave me the idea for 10x TV. I had the mental capacity to be able to go, okay, great, let's take that on. And because of what happened in 19, I'm like, I don't want to have to depend on one business. And then 10X TV was born. It's a phenomenal business. I love our clients. I love the impact we're having on it, on people. And it's just been good all around. And then there was one more thing I was just thinking. Um, oh, and Angelo mentioned it. Masterminds, get into a mastermind group, get around people. Those of you that are listening on this call, this is kind of a mini version of a mastermind. But if you can get into a mastermind where you meet once a month, once a quarter, and really get to share information with other investors, kind of like we're doing here in an intimate setting, it is a game changer. I mean, just, if I can refer, Michael and Angelo, a fund attorney that can save them $5,000 to $10,000, that right there is, money in the bank. So
That's probably going to save me 20,000, to be honest.
really, did you get a quote for 25?
Very close, shy of that. And I was like, no way, Jose. But I did want to add to your point, joining the mastermind. Another thing also, I think Ornella mentioned it earlier, having a coach, having a quality coach at all times. I've had several coaches over the last, 15 years or so, 3 really incredible ones that the goal of a coach, in my opinion, and good coaches will tell you this, they say, hey, Angelo, I'm going to work with you. You are going to outgrow me. And when you outgrow me, I will tell you the next coach to go to. I will help you find that next level coach. If you hear somebody say that to you and you're on a prospective coaching call and they say that to you, like, that's the person I want to coach with. I've had a coach for my whole time here, still do to this day. I have a coaching call tomorrow with my coach. Like, it makes a massive impact. And the ROI on it it's really incomprehensible, because I've been with this coach now for about 2 years, and 90% of our conversations are now personal life stuff, like being a husband, being a wife, or a father, being, a better brother. It's mostly that, because he's much older. He's in his 50s or 60s. His kids are out of the house. He's been through everything I'm going through now. So not just in business, but also in life. Anybody listening, having a coach has been incredible.
Absolutely. I have 2 coaches right now, and I kind of like add that as people on my team, right? You have your CPA, you have your accountant, you have your bookkeeper, you have your attorney, you have your CFO, coaches another thing. I pay my coach $600 an hour, and I pay my attorney $350 an hour. And it's because my attorney keeps me out of trouble, and my coach shows me how to make some money, right? And get me in the right mindset. It is, you're right. You can't even put a value on it, what coaching does. So that is definitely a good one right there. Good one to stop with. So thank you guys for coming on that are listening in. Nick, Mo, Matt, Jeff, Jack, Grace, Alex, Noah, and then you guys, panelists, you guys are awesome. I appreciate you taking your time, your valuable time, to come on and do this with us. All right.
Thank
See you guys. Have a good one.
Thanks, guys.
You too.